Greetings of the day. This video is relevant and helpful for all the practicing chartered accountants who are doing audit of companies or other organizations. This is also relevant for company finance head and HR professionals as well. So today we are discussing on the actuarial valuation of gratuity and its accounting applicability under AS 15. First of all, we should discuss when the gratuity is applicable. In India, gratuity is applicable as per the Payment of Gratuity Act 1972. It applies to all companies and other organizations, establishments having 10 or more employees. And once the Gratuity Act is applicable, it is applicable forever, even though the number of employee falls below 10. Gratuity is paid to employee on the separation when they resign, retire, or superannuates from the company and subject to a minimum service of 5 years. But in case of death or permanent disability, the 5-year service requirement is not applicable. This vesting condition is relaxed for the case of death. Gratuity is calculated as 15 days salary for each year of service. So the formula is last drawn monthly salary, which is basic plus dearness allowance, multiply by 15 divided by 26, multiply by completed year of service, which is rounded years. As per Gratuity Act, the maximum limit is 20 lakhs as per section 4.3, but at the same time Gratuity Act gives a flexibility that if employer wants to pay more gratuity which is beneficial than Gratuity Act, they are allowed to pay. So in nutshell, Gratuity Act is applicable to all organizations having 10 or more employees. So they have to follow the compliance of gratuity. In other words, if in a company the PF Act is applicable, Gratuity Act is automatically applicable because here gratuity is applicable based on 10 employees. So we need to ensure that whether company is following the compliance of gratuity payment and the accounting of the gratuity. How the gratuity accounting is done, that we will see in this slide. Gratuity is one of the employee benefits, and as all companies are required to follow the Companies Act 2013, in that we have given various accounting standards, and AS 15 is one of the applicable accounting standard which is also to be complied by all the companies. As per this accounting standard 15, accounts are to be prepared as per the accrual principle, and expenses needs to be recognized when service is rendered and not on the payment basis. Although payment can happen in the future years, but we need to recognize the expense when service is rendered. Secondly, we need to recognize the liability when employee has provided the service in exchange of the benefit which is payable in the future years. For example, in case of gratuity, service is rendered when employee is working throughout the service period, but payment is happening at the end of the separation when they leaves the organization. So in AS 15 we have para 49 and para 65, which talks about the accounting of these kind of benefits. These are classified as post-employment benefit obligation, and within that it is classified as a defined benefit obligation. So for this kind of benefit, the accounting is to be done as per the actuarial valuation calculation using the projected unit credit method. So PUCM method is used by the actuaries to calculate the provision for this benefit. Then sometime the question comes whether we need to account for the service when benefit is not vested. For example, if service is less than 5 years, why should we make the provision? So in the AS 15 we have para 70, which talks about non-vested benefits, and it says the provision is required for this kind of benefit as well. Although while calculating the provision for non-vested benefits, we need to allow for the probability that employee will complete the 5 years of service, and we need to consider the attrition rate and chance of payment, and only the proportionate provision is made in the books of accounts. Then apart from the accounting standard, there is a requirement given in the standard on auditing as well. Like here in India, we have SA 620, which talks about the using the work of actuaries expertise for the calculation of defined benefit plan liabilities. This is given under the para 6A. Read with para A1 of the SA 620. When we move to Ind AS 19, which is more similar to IFRS and usually applicable to listed companies and other large organizations based on the net worth criteria and all. In case of Ind AS 19 for post-employment benefit obligations, the accounting requirement is slightly stringent than the AS 15 because it requires more disclosures as compared to AS 15, and at the same time the accounting for actuarial gain loss is different because here actuarial gain loss are recognized in other comprehensive income rather than profit and loss account. So in a way, in the nutshell, if company is having more than 10 employees, they are covered under the Gratuity Act, and provision for the same in books of account is mandatorily required as per the Actuarial Valuation PUCM method. Now we see whether there are certain relaxations given or not to the small companies, because the companies are bifurcated into two criteria: SMC, which is small and medium company, and non-SMC, which is the large company. And this criteria of SMC and non-SMC is given by the MCA. As of now, we are talking about the latest criteria, which is applicable after the accounting period 1st April 2021. As per this criteria, if company is a unlisted company, it is not a banking finance company, turnover is less than 250 crore and borrowing is less than 50 crore, then it is classified as a small and medium company. And if the holding company is SMC company, then subsidiary will also be SMC company and vice versa. So in a group of companies, if one company breach the condition, then all other will be classified under the non-SMC. For example, if the subsidiary company have borrowing more than 50 crore, then all the group companies will be classified as a non-SMC company. Earlier, before March 2021, this limit of 250 crore turnover was 50 crore and borrowing limit of 50 crore was earlier 10 crore. And also there is a requirement that one has to stay at least 2 years in the SMC criteria when they move from non-SMC to SMC category. So the detailed information about this applicability of SMC and non-SMC company is given in this link, which is copied in the description below as well. When we talk specifically to AS 15 applicability regarding the companies, corporate clients, in case of AS 15, we have classified the benefits in 4 types: short-term employee benefits, post-employment benefits, other long-term, and termination benefit. So what happens? Provision is required for all the benefits by all size of companies, whether it is small company, large company, whatever is the type of benefit. So provision is required for all type of benefits, but whether the provision is required as per actuarial valuation formula of PUCM method or not, that is we need to check. If it is a short-term employee benefit, actuarial valuation is not required. At the same time, detailed disclosures are also not required. But when it is a post-employment benefit, like gratuity, pension, post-retirement medical benefit. In these kind of schemes, if it is a non-SMC, which is a large company, they need to make the provision as per actuarial valuation, and the disclosures are also required as per the AS 15. So they have to make the detailed disclosures as well. But if it is a small and medium company, SMC company, they have to ensure the provision is made as per the PUCM method, but disclosures are exempted for them. So relaxation given to SMC companies only regarding the disclosures, but they need to make the provision as per actuarial valuation PUCM method. For that, there is no relaxation. So in a way, in nutshell, if we say all the companies having more than 10 employees, whether it is SMC company or a large company, non-SMC, they have to make the provision as per actuarial valuation. But for SMC company, there is a disclosure exemption. When it comes to other long-term employee benefits like leave, deferred incentive, long-term service reward, in this kind of benefits, provision is required as per the PUCM projected unit credit method, but detailed disclosures are not required. They are not required for even small companies and not for the large companies. When we move on to termination benefits, provision is required as per AS 15, but not any actuarial provision. So similarly, there are no detailed disclosure requirement, but only small disclosures about the type of benefit and the amount of benefit is required. But detailed disclosures like current service cost, interest cost, actuarial gain loss, etc., they are not required for termination benefit. They are required mainly only for post-employment benefits, that too only for non-SMC category. So there is usually a misconception and different practices being followed in the industry that whether the disclosures are required by all companies, whether disclosures are required under other long-term benefits or not, to which kind of entities actuarial valuation is required. So this table gives a brief summary where actuarial valuation is required and where the disclosures are required. When we move on to accounting applicability for the non-corporate entities, this is different because accounting applicability for non-corporate entities is governed by the Institute of Chartered Accountant of India. So our CA Institute publishes the disclosures and the accounting standards along with the applicability guideline for the non-company entities. Non-company entities are classified under 4 categories: level 1, 2, 3 and 4, and this is recently upgraded with effect from accounting period after 1st April 2020, because earlier there were only 3 categories. Now we have 4 categories: level 1, 2, 3 and 4. So this is basically defined under this grid. This is based on the turnover borrowing criteria. If we have turnover less than 10 crore and borrowing less than 2 crore, and again it is not a listed entity and not a banking finance entity, so this will be classified as a level 4. That means you can say micro entity. In case of level 3, the turnover limit is 10 crore to 50 crore, borrowing is 2 crore to 10 crore, and level 2 is slightly higher, 50 crore to 250 crore turnover, borrowing 10 crore to 50 crore, and so on. So according to the turnover and borrowing criteria, they have been defined, and for the non-company entities we need to follow the accounting standards published by the ICAI. Now why it is important to discuss the accounting standard published by ICAI and accounting standard published by MCA? Because there is a key difference that in case of accounting standards published by ICAI, under the accounting standard 15, for the AS 15 applicability, they have given one more criteria for the purpose of relaxation based on the employee count of less than 50 and more than 50. But in case of accounting standards issued by MCA for corporates. There is no such criteria of employee less than 50 and more than 50, but here for non-company entities it is given. So that's why it is important to see both type of organizations differently. And when it comes to the non-company entities, the AS15 as per ICAI, the major difference is the level 4 companies, which is the micro company, you can say. The turnover was less than 2 crore and borrowing was less than 2 crore. In that case, the provision is required in the books of accounts, but provision as per actuarial valuation is exempted, whether the employee count is more than 50 or less than 50. But if we have the level 2 and 3 company, where employee count is less than 50, they are exempt from making the provision as per actuarial calculation. They can make the provision as per own method of calculation, but actuarial valuation is not mandatory. But at the same time, provision is required. We cannot do away with the provision. We have to make the provision. But if the employee count is more than 50, yes, we need to make the provision as per actuarial calculation. So in other words, if I say if turnover is less than 2 crore and borrowing is less than 2 crore and it is a non-corporate entity, then actuarial valuation is not required, but provision is required for gratuity and leave. If we have turnover which is more than 10 crore but less than 250 crore and borrowing 2 crore to 50 crore, that means level 2 and 3 combined. In that case, we need to check employee count as well, less than 50, more than 50. So as such, it is little bit complex, but that's why we have prepared this grid for the simplicity purpose. And in case the actuarial valuation is exempted for any specific class of entities, then such class of entities need to calculate the provision. For example, considering all employees will be paid the benefit immediately. This is again prescribed under the Accounting Standard 15, which is issued by ICAI themselves. And otherwise, they can use some other rational method as well. This is our profile. I am a chartered accountant and actuary. I am a actuary from India, UK, and Sri Lanka, and chartered accountant from India. Currently, I am also serving as a secretary to the advisory group of employee benefits set up by Institute of Actuaries of India. I'm into this employee benefits domain for last more than 8 years, having the post-qualification experience of around 5 years, and I have done my articleship from Deloitte during the CA curriculum. Some of my key achievements are securing 15th All India rank in CA IPCC exam and 99 marks in CA IPCC accountancy. I am also All India topper in special technical subject, employee benefits and pensions, and also code application modeling documentation. I am one of the youngest fellow member of actuaries in India by qualifying at the age of 24 and also CA at the age of 21. Currently, I am one of the youngest member in actuaries profession to serve as a secretary of any advisory group. And also, I am the faculty member on the certificate course on Ind AS set up by ICAI. So this is all about ourselves and our firm. Our firm is Kandoyan Company, and this is prepared for the educational purpose and awareness, because when we see the Financial Review Board statement on the incompliance on the accounting standards, AS15 is one of the most incompliant standard in that. So that's why we have prepared this document for the general awareness amongst chartered accountants, company finance head, and HR professionals about the social security benefit of gratuity and leave. Stay tuned with us for more such awareness videos and other documents. Thank you very much for listening to us. In case you have any other suggestion or comments you want to make, or you require any help on this topic, you can connect with us on this given details. Thank you very much.